Right. Yeah, buddy. Checking 1 2, checking 1 2. The Savage is live once again. My fellow simpletons and degenerates. I hope you guys are doing well. We're back at it again on this weekend on a Sunday at 11 a.m., 11:15 California time. Still morning here. I don't know where you guys are at, and I don't know what times there are. But if you're in the East Coast, it's probably closest to 2 p.m., 2:15. And so I did say I was going to go on at 5 p.m. today, my time. That's in the next 6 hours, but I don't know if I'll be able to. So, being the man that I am, I figured, you know what? I'm going to go on. I'm going to go on now, and in the hopes that you guys can watch this video later, or if you guys can watch me now, even better. So, good morning, and I hope you guys are having a good weekend wherever it is that you guys are at. At this point, I'm basically just going to try to warn our folks that are in the on the Discord, and we'll just let them know that we are, in fact, live this morning. Now, if I could just find where they are located, that's good. Okay, good morning, guys. We're gonna cover quite a bit of things today. It seems like we're gonna get lower rates based on the information that Jerome Powell gave us on Friday. I was able to digest the news a little bit. I was able to read a little more into what the expectations are, as well as we got to keep focused on and remember that no matter what happens, we are going to try to make as much money as possible, given the fact that we don't care whether rates go up or down. We are going to keep to our discipline and sell covered calls when we can and catch your puts when we can. Now, today, I'd like to touch base on the fact that GME does have earnings. Let's remember that. In a few weeks, they're going to release some numbers. And I think that just the sheer fact that a few years ago, this company was almost bankrupt and getting shorted to death, right? And I think they were somewhere around $1.5 billion in debt, to the fact that now they have $9 to $10 billion in the bank and virtually no debt whatsoever. That's going to make it so that this stock perhaps can fly once again. So it's just a matter of being patient. It's just a matter of you remembering why you bought into the company, and just look at how the stock is manipulated, right? Everything was going up 5-10% on Friday on the news that we're going to get lower interest rates, right? I think that the overall percentage of us getting a rate cut is now 100%, based on like a lot of Vegas odds and the odd makers and people in the media that, this is kind of supposedly what they do for a living, right? They give you like percentage basis on what may happen, although we don't know. One can safely assume that, we are going to get a tax cut. Now, if you want to think of it in terms of Jerome Powell bending the knee, that's your prerogative, but all I got to say is this. President Trump decided to went to the Fed building, right? And he was kicking the tires, looking under the hood, and basically said, you guys are spending $2 billion and you have nothing to show for it. Nothing has been really restructured. Nothing has been added to this building. I want to see where that money went. And I think he perhaps threatened an internal audit, and Jerome Powell decided that he does not want that. His reasons could be whatever they are. The simple fact that PPI is extremely high and unemployment is higher, to the point where it meets the same numbers and metrics as like when the pandemic was at its top, right? I mean, that right there should sound off some alarms, but nevertheless, and even though it goes against, I guess, the norms, we're gonna get some rate cuts. Now, the reason of why we're getting them, I guess, at this point, we can all argue that point, right? But the fact of the matter is that President Trump will, in fact, get his rate cuts. And some people are saying that the goal is to get the rate cuts back to like around 2%. Now, how is that going to play out? How is that going to affect the economy? What long-term implications do we have? We don't know because we're not there yet, right? However, all I do know is that GME does not have the need for any loans at this point. I mean, they are sitting on $9 billion of cash, right? And if you would take into account the amount of cash and Bitcoin that they have, and they have bought Bitcoin, it's almost $10 billion. So that's insane. That is an insane amount of money to be sitting on as a private company or as a public company, a publicly traded company, especially when so much information is out there as far as what the metrics of the company are, the fundamentals, how it's ran, how it's managed. And given that the CEO doesn't take any pay, I mean, he literally is donating all the money he would get as a CEO and putting it back into the company, right? So for him, because he's one of the major shareholders of the company, it's in his best interest that the company's stock is as expensive as possible. And so how is that going to fly during earnings, right? I have a pretty bullish outtake on it, and I mean it's right there. I think we're gonna make money and lots of it in the next coming up year or two. And I think, although I may think it's frothy and I may not like it personally, right? Because um, we do need a healthy pullback once in a while when it comes to the stock market. Those are healthy whenever we have a 5-10% correction, so that the economy doesn't just run away hot, right? Um, Once interest rates fall, that's going to be actually really, really good for a lot of the companies that we are looking at. For example, we're looking at RXRX and C3.ai. Those are small cap stocks, and the more money that they're able to borrow, the better it is, because they can put that back into the company, and then they can fund their research a lot more, and they could in turn have better quarters, and so more marketing, more exposure, more companies using their service, and so that just means more money. All right, what do we got here? Let's see here. Kent's mom is in the house as the number one batch. Yes, sir. Kent's mom, good morning, wherever it is that you are. Thank you for watching today. There's not many of us on here. I noticed that, and that's okay. I know everybody has a life and you guys got things to do, but if you have nothing to do today or you have some downtime, I guess we can all sit down and kind of, talk shop, right? And see what it is that, we can do to prepare for this coming up week of trading, especially with the news that now it is very likely that we're going to get a tax or a rate cut in September. Hector's in the house saying good day, Hector. How you doing, Hector? Kilua Dre's in the house saying hello. Will in Idaho saying put it in work, Savage. That's right, man. I'm just over here. I have some downtime. I needed to I need to heat my back, and I did some exercises, and so I'm going to sit down for like 45 minutes to an hour, and I'm make it a video because I figured, you know what, I'm going to use my time wisely and see how you guys are doing. GTA 6 going to moon GME. I mean, I honestly think we're going to get like 2 more presidents before GTA 6, or maybe not. Willie Knight was saying Neo to 100. We'll see. I mean, I was pleasantly surprised seeing Neo kind of, top off the way that it did, and I sold the 150 um, calls that I had. I had some contracts, and I made a nice little bit of a change, and then I was raising cash. I was raising cash in the off chance that we were gonna have a bloody Friday, and it was completely different from what I thought it was gonna be, and that's fine. I mean, I honestly like to be pleasantly surprised. Now I have a lot of cash on hand, and I actually went shopping on Friday. I saw that some companies kind of had kind of done this little V shape, so to speak, and I saw that they had a little more room to the upside, and I decided to do some cash secure puts. And then after selling, however many cash secure puts, I had all this premium, and then I decided to buy some companies like at market price because it's still, even though yes, they were running 5% for the day or more, they were still close to the 52-week low. In which case, if we do have a rate cut, right, or rate cuts, those companies are going to be worth a lot more money. That's just what happens, right? They have more cash available to them to borrow at a way lower rate, and so they're able to keep their companies afloat. They're able to market a lot more, reach more people, and then the FOMO happens, right? Then we have people that are like, "Oh my God, the stock market is at 52-week highs or all-time highs, whatever," and then you're going to have all these news talking heads talking about the market being on fire, and people are going to be like, "Oh my God, I need to get on this," and they're going to. A lot of uneducated investors are going to come in and start buying everything. They're probably not going to go for your Teslas, your Nvidias, your Microsoft because they're too expensive. What are they going to do? They're going to go into like the small cap stocks. Remember a couple of years back in 2020, 2021, right? When stocks only went up, well, I think we're going to be there again. So we'll see what happens, man. Alex is in the house saying good evening, Savage from the UK. Alex, my man, how are you, man? I hope you're doing great over there in the UK and you guys are having a good time. Willie Knight always saying, Powell saved all my puts. Great weekend. In fact, I mean, he did. He saved everybody's puts, right? And I was actually, I was looking red on some of them, and you know what? He was able to make me more money, and I love it. So, anyways, the reason I wanted to come on today was because I usually am talking, trades, right, and giving you guys kind of like an example of where I'm trading at, what different strike prices and strike dates I'm looking at, right? But I do know that sometimes I don't go in depth into the companies that I talk about. So today I figured I was going to talk about a couple of them, right? And we're going to start with RXRX. And I'm just basically going to give you like a nice little synopsis on why I think that RXRX is such a good company right now, especially right now. The rates are going to be cut. Why this company is like it's just ripe for the takeoff, right? So it has very strong fundamentals, right? First and foremost, it has strong fundamentals. There's a really good CEO that has been doing this for a while. They keep selling their services to companies that have been around for a while, and those contracts keep being renewed, right? So they have strong external validation, non-dilutive funding from blue chips, Recursion's multi-target discovery deals with Roche, companies like the Genentechs. They give us a neuro and GI oncology backgrounds to now combine with what it is that they do, right? Which is pretty much they get all this information and data that these companies, pharmaceutical companies, have, and they're able to basically run tests for them using the incredible amount of data that they do. And instead of companies waiting years, months, to come up with the information that they require from these tests, they're able to do it in hours. And these companies, time is money for them, obviously, right? And whenever it is that they use RXRX as a service, if they do come across a candidate, a good candidate for like some type of pharmaceutical that is going to go on trial, and if for whatever reasons it makes it to the last stages, which is FDA approval, right? RXRX takes 5% of that for a very, very long time, right? And so that is where the incredible amounts of money are going to come for this company, because they don't use their service for just a couple of companies. There's hundreds and hundreds of companies that use RXRX's service, and the royalties is where the money lies. So let's say, for example, that Bayer and Genentech and Sanofi come up with a drug that gets FDA approved, and I don't know, it costs like $500, a month for the supply of medication, right? Your insurance was going to cover some of it, right? And you're going to come out of pocket with $20, $30. But the bottom line is that drug is going to have a $500 price. Let's just say that. Well, RXRX is going to get a cut of those $500, because the royalties is what they're going to be owed, because they used RXRX to run their tests, and now RXRX is going to get a cut of every single one pharmaceutical that goes and gets FDA approved. And if you combine however many different drugs are approved by the FDA and go into market, so that's, you can multiply that, right? And see that RXRX, in fact, will get a cut of all of those. That is where this company is going to grow and grow massively. So Sanofi by itself just hit its fourth discovery milestone, including a $7 million payment to RXRX. Bayer and Merck continue to progress, and clear signals that top pharmaceuticals value the platform and are willing to fund it. So if you have companies like Bayer and Merck, if you're in the pharmaceutical industry, those companies are not just any type of low cap companies. These are companies that have been on for a while. They've been making billions for years, and they're still here because they are heavily used pharmaceutical companies and have drugs that we all use in our everyday life, right? And so those companies are not going away anytime soon. And if they're willing to take, 10, 20, 30, $40 million a year and give it to RXRX so that they can fund the company, that tells you that this company obviously has a service that is good, a service that is justified by these companies on being paid to and for, right? Wing Commanders in the house saying savage. Duty saying let's go. Mr. Peace in the house saying hello. Now, I'm talking pharmaceuticals, right? But RXRX actually signed a contract with NVIDIA. And the NVIDIA partnership now places a real compute to data moat. NVIDIA actually invested $50 million and partnered with RXRX on foundation models. And they call it BioNeMo. RXRX operates BioHive 2, an NVIDIA DGX SuperPod with 504 H100 GPUs that ranks among the most powerful industry systems. The combination, capital plus tooling plus compute, is a durable edge for AI native discovery. Another of the reasons why I'm so bullish on this company is the fact that they are using and combining AI and pharmaceuticals. And when I read this 2 years ago, I was like, how can these two entities meet and make money, right? And I sat down and I listened to the CEO of RXRX talk about just how much money they would save by having AI models combined with, the pharmaceutical companies that they have contracts with, how they're able to then take all that data, and instead of having somebody crunch all that data by themselves in an office somewhere, they're able to now hand it over to an AI model, right? And then this AI entity and is then able to take all the amounts of data that are produced with these trials and runs its own models, right? Runs its own test, independent of the ones that they already made. And instead of doing, I don't know, 500, 300 models or tests, in a couple of months, will run 1 million, 2 million tests within weeks. And then they're able to come up with the top 1%. And that's what they hand the company and say, these are the best routes for you to take. With this data, then that company is able to turn it around and change whatever metrics it is that they got to change, and change whatever models they need to change. And then they come back and run those tests with the additional data that they just received from RXRX, right? And are able to then come up with a lot better results. I know this is not the sexiest thing, right, to hear. And for somebody that's not in the industry, the pharmaceutical industry, that is, this is boring crap, right? But the way that it was explained to me, all right, it was basically pharmaceuticals are a multi-billion-dollar industry, right? AI 2-3 years ago, right, was being talked about being the next frontier. Now we know that we are there, right? So you combine these two, and you think of just the possibilities of medicine that can now be worked on because of the amount of information that RXRX ended up spending years and years just gathering from all these companies, right? They're now able to run millions and millions and millions of tests to cure all types of disease. We're talking, pancreatic cancer. We're talking about degenerative bone loss. We're talking about leukemias, all types of leukemias, skin cancers. I mean, just you think of every type of cancer and every type of degenerative disease out there, right? There's way more possibilities to come up with a medication now because of these models that are being worked on, right? And so that's one of the reasons why I was just so so excited to just hear that there was a company kind of meeting, these needs. And up to that point, I was like, who's their competitor? They had no competitor. That's the crazy thing. And so I was like, you know what? Back then, I think that the shares were like around $7 a share. Now, RXRX, it went up to $15, $16 a share. And then it came back down, right? And then went back up to like $14, $15. It came back down. And then I started looking at everything else, and I just saw how heavily shorted it is, right? There's not that many shares in existence. Yet, for some reason, somebody thought it would be funny to just start shorting the shit out of this company, and they tried their best to get it down as low as possible, but they couldn't get it below 380, I think, 370. And that was the catalyst, at least for me. And then when I went in heavy, because right now, just right now, it is extremely expensive to borrow. The cost to borrow these shares is very, very expensive. And so I am just waiting for that one shoe to drop, for that one test, right? That gets the media's attention, like the cure for male baldness pattern or male pattern baldness, or like a new Alzheimer's, medication that they worked on. I mean, once that one news cycle hits and they find out that RXRX was part of it, this company is going to $100 a share. There is no metrics up to as to how fast it can go, just because there is no really history. I mean, it's gone as far as $15. We don't know what it can do after that. So the FOMO, I think, is going to be insane once they realize this is not just a pharmaceutical company, it's an AI company. AI is the future. We know that now, right? We're not talking about quantum theory and that being like the next frontier after AI. But like, if you think in terms of the AI revolution and baseball, right? The game has 9 innings. As far as AI goes, right now we're like in the first inning. That's how much in its infancy AI is to us. And so there's still 8 innings left. It's very exciting for me, at least, to think on where we may go from here, just based on all the information that we have thus far, right? And NVIDIA has shown that people are willing to pay $1,000 a share of a stock that, even though people may say is trading above its value, people are willing to pay a premium to hold a stock that they feel is justified in being that price. Same thing with Palantir, and I was telling people to buy Palantir 2 years ago when it was $8 a share. It was $10 a share. I was pounding the table telling people to buy Palantir, and make no mistake, these are life-changing stocks, man. Let's say, for example, if you would have happened to caught wind of my channel, say a year and a half ago, when Palantir was like $20. Let's just say that, right? And you bought, I don't know, 1,000 shares, right? Okay, Palantir hit 175, right? You could have had $175,000, like $175,000 out of your $20,000. That's life-changing money, man. You could definitely pay off the rest of your student loans with that money. You could pay off, the rest of your mortgage. You can You can put down a house for a house payment. You can put down to buy a house. You can put money down to buy a house. I mean, that's just the amount of opportunity that we have right now when these interest rates get cut is quite a lot. And it's just up to you, on what types of chances you want to take. But you have to be very careful and not go and buy go dumpster diving, for so to speak, right? For some reason, when interest rates are cut, in the past at least, people get very excited, on the market when the news are already hitting and people are talking about the stock market being on fire um, and having all these new retail investors coming in. The FOMO kicks in for sure. They won't. The average retail investor, they're not going to spend, $100,000 to buy, I don't know, 1,000 shares of NVDA. That's not the type of money that a retail investor, on average, will have, right? What do they look for? Well, they look for just a name for some reason. They for some reason look at a name. It looks cool, and then they look at a price. If it's under $1, they get very excited and they buy ridiculous amounts of shares. They'll spend $5,000 buying a 50-cent stock. But that's kind of what Wall Street wants you to do. They want you to go dumpster diving and put money into all these silly companies, that are honestly about nothing, and then they short them. And then 50 cents goes to 30 cents and 15 cents. And people see their portfolio go from like $5,000 to like $2,000. They get scared and they sell and they say, I can't do this. Now you multiply that by a few million, right? That's a lot of money. I am hoping that that's not us, right? That's especially you guys watching. I'm hoping that you guys, take heed and look at what we've been looking at, and don't try to get too cute and go crazy buying all these like mega low cap penny companies. Look at your RXRXs, man. These are companies that have been around a few years now, and they're battling. They're getting shorted, but they're still here for a reason. Look at your C3.AIs, right? Look at your Rivians. Look at GME. If you have an extra $2,300, buy 100 shares of GME, because once GME decides to go, it's going to go. Archer Aviation, because of the national security contracts that they're looking to sign, and the way that I guess the government is looking to use this company, they're gonna make a lot of money, man. Think of unmanned aircraft all over the border patrolling. That's kind of what they're gonna do with this technology. They're gonna get to the point where they're gonna patrol that border. All those thousands of miles of border, right? It's too much for just people to even if you're having a robot, per person, you would need I don't know how many people. Like, you would need so much attention to be put into like this one screen, right? So if you have, I don't know, 10,000 drones up there, that requires 10,000 operators, right? I just don't think that's going to be justified. Now, if you have an unmanned aircraft that is using AI and then sends alerts to Border Patrol, that's different. And that's Archer Aviation. That's where I think we're going. And I think this stock is sitting at 975 right now. it'll be like $75 before we know it. Especially when the rates get cut and they're able to put a lot more money into the company so that they can start um, working towards whatever it is that they their vision, the vision of their CEO is. You know, there's Sentinel One. The stocker is S. I mean the ticker is S for Sentinel One. It's sitting here at 16.98 a share. With $1,700, you can get 100 shares of this. This stock reminds me of CrowdStrike. I was talking about CrowdStrike a couple of years ago. I think it was like $80 a share, which was a little expensive at the time, right? But still, I mean, look at what CrowdStrike is now. It's several hundreds of dollars a share. You know, so you could 5x, 6x your money easily. Why would you buy CrowdStrike, you know, for $500, $400 a share right now when you could go to Sentinel One and it's sitting at 16.98, and they do the same thing? Direct competitor to CrowdStrike. People are going to start to look at saving some cash, right? Especially when there's all these layoffs looming. I assure you, Sentinel One is going to be 40, $50 a share before we know it. I don't know when it's going to happen. Yeah, I don't have a crystal ball. But given their metrics, giving, you know, their earnings and the forward guidance that they've given, I feel fairly confident that this company is at least going to double X, you know, and go up 100% in the next couple of years. I mean, it's sitting at 16.98 right now. Lucid is sitting at $2 a share. You know, it's an electric vehicle company. If Tesla is too expensive for you, get a couple of hundred shares of Lucid. It's $2 a share at this point. They've been fighting. They've been fighting for the last few years, you know, and it just, interest rates really being high have affected it. Now interest rates are going to fall. There's a lot of Saudi money on here. Okay, that company is not going anywhere. Saudis have endless pockets. They're not gonna let this company fail, right? Look for it to make a really violent move upwards in the next year or two. I don't know when that month will be, right? I don't know when it's going to happen. And they are going to do a 1-to-10 reverse split, of course. But that just means that there's going to be less shares available. So it'll be easier to move the stock up and down, right? It still holds, though. There's just a lot of Saudi money on it. And I think that being that, you know, it's going after a specific market, I still think that these guys are going to make some money. Just the sheer fact that they have the Lucid Gravity. It's an SUV, and it can go 750 miles per one charge. Just having that technology by itself is worth something, right? So the question is, when is it going to happen? We don't know. But something tells me that having way more money available to borrow is going to help the situation, and at a lower rate. Open door technologies. I was talking about open door technologies, you know, a year ago, and I was saying this is a real estate play. Once rate cuts happen, this stock is going to be $5, $8, $10, and you don't have to believe me. You can look at the videos that I was making 6 months ago, a year ago. And I was talking about the same thing I'm talking now. It's like this company, you know, it did not belong at 50 cents a share. It didn't belong at 60, 70 cents a share. It just didn't. It was criminal. But I bought a ridiculous amount of shares at that price point because the opportunity was there. Just like I'm buying, you know, Lucid, and I'm buying, you know, Sentinel One shares, and I'm buying RXRX. I mean, every chance I get to add to my position, I take it. So that's kind of what you do when there's opportunity out there, right? All right, what do we got here? Mr. P said hello. Lisa saying, all right, Savage, good to see you. Your artwork. Thank you. I try, right? It's not really mine. I bought it, but it is back there. I'm fairly bullish on what's coming ahead. Jared's in the house saying, greetings from sunny Cincinnati. Lisa is saying that they're doing a reverse split. I have sold a lucid $3 cash you put. Does that mean that I'll be put 10 shares instead of 100? That's exactly what it means. That is exactly what it means. And if you were holding, if you did 10 of those, then you would be getting 100 shares. So, yeah, that's what it means. You're going to get 10 shares. So what I would do right now is I would buy 90 shares so that when you get those 10 put to you, you'll have, you'll be able to average down. And I don't see anything wrong with that at all. Just get it. Well, it's cheap. SoFi was $4 a share like a couple of years ago, and then that was your cue, right? That was your chance to go and buy like a mofo because you believed in the company, right? You knew what you had. You're like, I think that, I mean, who was thinking about just digital banks at that point, right? Like people were not like really thinking about digital banks. They were like, what? But SoFi, I don't know, man. They don't really have branches, blah blah blah. And it's like they didn't see the bigger picture, right? They didn't see that down the road. I mean, that's where all banks are going. They're closing branches left and right at this point. When was the last time that you went to a bank, like a physical bank? When was the last time you yourself went in, to deposit a check? You do everything electronically now, right? You have e-deposits. That's where we're going. Banks are going to start cutting costs massively, and the number one way to cut costs is to lay people off. Lay people off. You don't have to pay for their insurance, dental, medical. You don't have to pay for security guards to guard that place. You don't have to pay rent, right? You don't have to pay electric bills. You don't have to pay water bills, custodians. None of that. All that's just profit now, right? So like that's what SoFi is doing. It's just all profit. And I think that's kind of cool, man. I think that, the last time I went into a bank physically was like a couple of years ago. And that's why I was like, you know what? I'm going to go in on this company and I'm going to buy several thousand shares because I believe in this company. I believe in their CEO. CEO seems like a straight shooter. I like their board. Look into the board of the companies that you're investing in. Look at what they did beforehand, right? I know that the company, the RXRX company, is a really good company because their CEO has a really good track record, right? Their board has a good track record. The COO is a ringer. Their CFO is pretty awesome, right? And so these guys are all doctors that are they're really good doctors, right? And amazing researchers. I mean, these guys are the cream of the crop and they're working for this company that I'm invested in. And I think that's awesome. And meanwhile, I'm just hoarding all the shares that I can. I have $6 cash secure puts that are expiring in September. I could have rolled those last week on RXRX, and I'm not going to. I really want the shares. I have like 3,000 shares that are just gonna fall into my lap because I've already rolled them enough to where like my cost basis is like $4 or like $3.80, something like that. As long as the stock is above that, I'm good. I just want the shares at this point. So let's see here. Charlie C2 is in the house saying hi everyone. Sunday stream, nice. Yeah, man. I decided to go in because gonna put some heat on my back, right? And I was gonna sit down for like 45 minutes, an hour, and instead of just sitting down doing nothing, I was like, let me just go and do a live and talk to these knuckleheads, see what their thoughts are. And I was gonna give you a little more insight into RXRX, right? Same thing with C3.ai, man. C3.ai it's a good company. It's and you don't have to take my word for it. I don't know if you guys follow Zax.com. They basically, they're kind of like a neutral company that gives you like insight on different companies, right? And then they have like a metric that they follow, right? And then it's pretty good. Um, and whenever they give you a buy rating, it's kind of a big deal because they have some really good researchers that are kind of very, very neutral, unbiased, and I follow them because I like to get very neutral advice when it is that I am investing into a company, right? But just the key takeaways, right? And they're not trying to um, sugarcoat anything. They give you just numbers, right? And this is their key takeaways. C3.ai reported for the fiscal year 2025, revenue of $389.1 million, up 25%, with the fiscal year 2026 guidance up to 484.5 million. That means that there's going to be a shift of extra $90 million coming in, right? That's good. C3.ai has secured a U.S. Air Force contract. It's worth $450 million in expanded oil and gas sector bookings. Last I heard, oil and gas are not going anywhere, right? And those are deep pockets. Partnerships, they have partnership with Microsoft and Google. This helps position AI as a top app on Azure and Google Cloud, right? Reasons to be bullish on this AI stock. The Department of Defense, the U.S. Army, the Marine Corps, and the National Science Foundation, among others, received custom AI-powered solutions from C3.ai. The company recently received a contract increase with the U.S. Air Force, raising the limit to $450 million from $100 million. That is a $350 million increase. Okay. C3.ai solutions will help the U.S. Air Force identify maintenance needs for aircraft weapon systems and equipment. And in the fiscal year 2025, federal government contracts accounted for approximately 26% of C3.ai's bookings, which ended on April 30th, right? It's sitting pretty at this point. And although I'm not trying to say that C3.ai is the next NVIDIA, I will tell you this. When I was looking at C3.ai, I was also looking at a small company called Palantir, right? And they are very similar. This is the thing. The thing is that C3.ai can do what Palantir can do. But Palantir cannot do what C3.ai can do. Also, at the time, which is a couple of years ago, when I was looking at both companies, C3.ai actually took a contract or many contracts away from Palantir. So people that are in the know, that have actually done the pros and cons for these companies and looked at the metrics independently and decided, I'm going to go with C3.ai instead of Palantir, did it because they saw that the company can do whatever it is that they wanted it to do a lot better than Palantir. And so in a head-to-head, C3.ai is already won. However, Peter Thiel has very close ties to the U.S. government. Peter Thiel happens to be one of the main investors for Palantir, right? It's like the main investor. I think he's also a founder. And so this is the reason of why Palantir has like absolutely taken off, because the contracts just giving all these, the government's giving all these contracts to Palantir because of their close ties to the White House. And I think that J.D. Vance is like really good friends with Peter Thiel. Now, whatever their plans are, whatever their personal relationship is, that's got nothing to do with me. But you do have to take into account that because they do have the ear of the government, literally. Um, those contracts are pretty juicy at this point. However, it doesn't take away from the fact that C3.ai is a very, very good company. C3.ai was like $150 a share a couple of years ago. And then, the downturn happened, right? But it's a heavily, heavily shorted stock. And there's very little float volume wise, right? Available uh, every day that it trades. So at this point, obviously, the stock is what the stock is, right? Like it's worth whatever it's worth right now. It's in the 17s. But instead of taking this like as a direct attack and hanging like my head, I'm taking this as an opportunity to get way more shares of AI for a lot cheaper. AI was just $30 a share a couple of months ago, right? It's down at half that right now. So if I thought that C3.ai was worth $30, why wouldn't I think it's worth $17, $15, $14? A couple of weeks ago, it's at $14. It had absolutely no business being there. And yet I just went in and I bought. It's slowly moving up now, right? Rate cuts are going to happen. That means that they're going to be able to borrow a lot more money for a lot cheaper. You think that company is not going to go upwards now? I don't know. It's hard to say what's going to happen in the future, but I have a pretty good feeling, and I hate dealing in feelings, right? Because I'm a numbers guy. But based on what's happened in the past, right? One can assume, and I hate assuming, right, that this company is going to be all right. So at this point, I'm just hoarding as many shares as possible. I've been writing 1750 cash and cure puts on it for the last 2 weeks. I was buying this company when it was $30 a share a couple of years ago, and I was buying this company when it was $10 a share a year and change ago. And I keep buying. I keep doing cash cure puts, and I keep getting those puts, going to my account. And I love getting paid to buy a company that I want. And I'm just gonna keep adding to my position, right? Because I'm fairly confident that one day in the future, I don't know when this will happen. I don't know when, but I think C3.ai will be $100 a shares again, right? And when that happens, I'm going to love writing a $100 covered call out 2-3 months and bringing in $18, $20 per share. It's going to be beautiful, right? And if I get taken out, I'll be making over $100 a share. Woohoo, right? So, yeah, man, that's kind of what where we're at this weekend, right? That's kind of my thought processes now, and yeah, a lot of the stuff that you have to dig in when it comes to or dig into when you're researching these companies. A lot of shit is very, very, very vapid and boring, man. But you do have to do the research, right? And you have to just, if you're going to invest your hard-earned money, make sure that you have a lot of information. And although, I was basically reading some information to you guys as far as what RXRX is working on, and their the contracts that they've signed with which companies. You guys are able to see that they have contracts with Genentech, with Bayer, and Merck. Those are not small, tiny, little mom and pop companies. Those are behemoths in the pharmaceutical industry, right? So you have to make up your own decision, though. I'm not gonna go and tell you buy this stock right now. I can only give you information and say, hey, look, this company this is what they do. This is the people working with them. This is where they've been. And based on this information, my opinion is this is where it's going, right? But it's up to you to say whether this is worth your time or not. Is it worth $4 and change a share? RXRX. It's C3.ai worth $17 a share, right? It's SoFi worth $25 a share. SoFi right now, man, if you think it's ran in the last month or two, just wait. SoFi is going to $50 a share. It's going to $50 a share, especially now that rate cuts are going to happen. People are going to take loans out for a cheaper percentage, right? And SoFi is going to reap off all of those benefits. There's going to be a lot of small businesses that are going to be born between now and a couple of years from now. There's going to be a lot of people that are going to want to take out loans for whatever it is that they want to take out loans for. SoFi does not lend money to people that have bad FICO scores. Their average the average loan they make is to someone that has, I think, a 730 or 740 FICO score or above. So basically, what they're doing is they're mitigating their possibilities for somebody defaulting on that loan, right? So if you take that into account and just and look at the overall conditions of the market, right? And just year over year, quarter over quarter, just look at the metrics that SoFi seems to crush every quarter, year over year. SoFi is going to be a $100 stock at some point, but it's got to get to 30 first, right? And it seems like there's a ceiling in the $28 land. That's the all-time high, $28 a share. So that's what it was IPOE, I believe, right? So that's the SPAC days. But do you see some similarities between now and the SPAC days? Is now look at all these IPOs that are happening, in the last few weeks. It's madness. And then people are just excited because, now rates are going to be even lower. So you're going to have even more IPOs happen in the future. So, like, instead of getting lost in the jargon, getting lost in the ether, so to speak, right? Look at these companies that I'm talking about, and see if they make sense. And once you start diving into them a little bit, you'll see that these companies actually do make a lot of sense. Again, it also depends. Do they have a room in your portfolio? Do you already have something that kind of is similar to that, right? That's also up to you. All right, so let's see. Charlie C2 saying, I see the bull on the wall, thinking the markets are going to be bullish this week, also due to the Fed rate cut announcement. I agree, and that's exactly what I'm talking about, my friend. I'm talking about people being excited the rates are going to be cut and money's going to be cheaper. Companies are going to be able to borrow at a lower rate. They're going to be able to borrow a lot more, and it's going to be a free-for-all, man. So either you take advantage of the opportunity now, or just, 6 months from now, you're going to be like, I wish I would have bought this stock when it was like, $20, $5. Charlie's is still saying SoFi to 28.11 and beyond this week, maybe. We'll see. All-time highs are meant to be broken, right? But is this the week? We'll find out. It's sitting at $25 now. There's nothing wrong with writing $30 cash covered calls out to October or January. Especially if your average on SoFi is like $10, $12, $8. I mean, you write a $30 cover call, you're good. You're making over $2,000, per contract, because the shares you bought at $8, $10, you sell for $30. You make $20 a share times 100. That's $2,000. You sell 10 of those, that's $20,000. That's good money, man. Lisa saying the C3.ai totally slammed the sales department for the recent poor earnings. Well, yeah. So I mean, look, If you have a product that you know is good, if you have a product that you know kicks ass, and you have a sales team that is lagging and not ambitious, right? And then you're sick. The guy is sick. They basically waited on him, and they're basically they want him to do all the heavy lifting, right? And they kind of want to rest on their laurels and say, we're the marketing team, we're the sales team. Like, go out and fucking sell, right? Go out and go into the fucking, workforce, and tell companies this is why you should invest in our SaaS, right? Service as a service. I mean, software as a service, right? This is exactly why. And look at what we could do for your company, right? Look at what we've done. Look at the companies we've worked for. Go ask them. Do they like our service? Our software. Why do they like it? Do they see themselves going back? Why would you spend millions and millions or hundreds of millions of dollars trying to develop your own service when you could just, or your own system, when you could just adopt ours, and then boom, here it is. Same thing that fucking Salesforce does, right? Like, they have amazing sales teams, they have amazing marketing departments. What are they doing differently than C3.ai? You got to look at that. So I would have slammed them too and said, I'm fucking sick, I'm diseased. Like, do you guys expect me to go out and do everything by myself? Why can't you just go to bat for me, like for this company? You want the stock to be $50, $60 a share. It's not going to happen with you guys just fucking diddly daddling, right? Not giving it your all. So I start firing people. I would start fucking firing people, and I'd start cannibalizing from Salesforce, sales team, NVDA sales team, and I'd be like, look, these are some really good contracts that I'd like to offer you. Can you make that happen here? I know the product that I have is fucking great. We've beaten Palantir in the past. We're better than them. Like, I want you to go and say why, and I want you to bring me contracts, not like sign for 1 or 2 years, like $10-year contracts, 15-year contracts. Based on performance, and then just really put their feet to the fire, man. Let's see here. Karen D's in the house saying hi, Savage. Mr. Lucky's in the house. What it is, Mr. Lucky? Jude K is in the house saying good afternoon, Savage. Good afternoon, guys. I hope you guys are doing great. Thank you for watching. I'm probably gonna get going now because I promised my son I was gonna make him some shrimp for lunch, and he likes it a specific way, and so and I can make it. I know how he likes it, and his mom just basically, she said I had to make it, so I got to make it. So yeah, it's 12 here. It's almost lunchtime, so I'm gonna go and make some food for my kids, man. But I just, like I said, I wanted to go on and talk about RXRX, C3.ai, and give you guys a little bit of more information, as to the companies and what they offer, why I'm so bullish on them, right? And although I know RXRX, what I read was a fucking sleeper. If you read into it and you like jot it down and look for yourself, there's a reason that these guys are there. There's a reason why the Bayer company, Merck, and Genentech, they keep signing contracts with this company, right? And so they keep renewing contracts. There's a reason. And so, C3.ai, I just told you guys, why these C3.ai I'm so bullish on, and why it's so cheap right now. And so, I'm going to be adding to my position as much as I can, right? I wish I had a lot more money, right? So I could just be like, I want 10,000 shares of this and 10,000 shares of that, 20,000 shares of this. But like, I can't do that just yet. However, I can, I'm definitely looking forward to being like, I want 500 shares of this, 1,000 shares of that, 400 of that. It's just, it's just a matter of like now just taking all this cash that I'm sitting on and seeing how I'm going to deploy it, right? And I'm going to be more aggressive now with my cash secure puts because we are going to see some rate cuts in the future, which means companies are going to start going up slowly or pretty rapidly. We'll see. And those cash secure puts are just going to bringing in a lot of money. I'm going to be careful because I do know that PPI numbers are coming out in August, right? And they're going to be basically giving us or September, sorry. PPI numbers for August are going to come out in September, and I think those are going to show what the tariffs have done to the economy, how they're hitting us, and just how much companies are losing, and how much money it's going to be. It's going to be passed on to the consumer, which is us, right? So probably going to go back on at 5 p.m. today and talk about tomorrow. Right now, I just wanted to talk about C3.ai, RXRX, a little bit of NVDA, a little SoFi, and kind of give you like my bullish argument, right? Yeah. Thank you for watching, guys. I appreciate you guys very much, whatever you guys are. Mark C's in the house saying house number 12. Howdy. Dude, what's going on? Mr. Lucky, thank you for watching. Jude K, Lisa, Charlie C2, Mr. P, Willie Idaho, Alex, Wing Commander, Dude, Mr. P again, Kent's mom for sure, for always. Thank you for watching. Hector, thank you for watching. Kilua Dre. You guys peace out, man. And hopefully see you guys at 5 p.m. Today. If not, I'll see you guys at 8:30 a.m. tomorrow so that we can trade and see what we're working on tomorrow and how we've traded thus far to see what this week is going to have in store for us, right? I'm very excited to see how the markets are going to open tomorrow, and a lot of upside is what I smell in the air, and I'm totally bullish on this future of ours trading, man. I hopefully we'll be making some real good money tomorrow. Hopefully, you guys are going to make a lot of money tomorrow, and then we're going to look for opportunity and where we can get in and get the most bang out of most bang for our buck and the most premium and the juiciest premium from the stocks that we're looking at. Thank you for watching, Knuckleheads. I appreciate you guys very much. You guys take care and see you guys later. Bye.